What's up, everyone? Welcome back. Today I will be talking about NVIDIA. I will be doing a top-down approach and also talking through how stocks and futures correlate a lot. The what I will find is the easiest thing about stocks is the gap is already mapped out for you. So if you know in NQ, right, whenever you're in the futures contract, there's electronic trading hours and there's regular trading hours. Well, most of the stocks only operate on the regular trading hours. So, in futures, a lot of times there will be a what we call a new day opening gap, where the closing price at 4 o'clock, 4:30, I believe, and then the opening price at 9:30 a.m. the next day, that will be presumed as a gap if the ranges aren't overlapping. But in stocks, they already occur, so it's less clutter on the charts. It kind of tells you exactly if we gap higher, gap lower, and then that then also allows you to figure out, okay, well, how are we acting currently? Are we looking to reprice back into the gap, or are we trading higher? And if we are doing either of the two, does it offer an entry? Does it frame risk? Then that would be something to, what is it called? Tape read. I would like to preface this by saying this is not trade advice. Anything you hear and see and hear is not trade advice. Please refer to a license. Let's get into it. All right, so here we are. We have NVIDIA. We have the daily chart. All right, so the first thing that I see on the daily chart is that price has been trading back and forth in here, but ultimately we return back into. All right, so we're here. All right, so we're in this range. All right, with buy side liquidity pools here above these highs. So these are two equal highs. This high is lower. This high, the high to the right of it is lower than the high to the left of it. So that's considered a low resistance liquidity run, and the high comes in at 93.66. So we'll get that calibrated correctly. Come here, I'll put a buy side liquidity pool. Where are you? Or is this the one that I'm going with? Yep, it says previous day. I don't like that though. Do I not have a base buy side liquidity pool, sir? There we go. Okay, cool. Thank you. Sorry guys, OCD. So then we have the next liquidity pool will be the Wednesday's high. All right, and then that high comes in at 90.37. So we calibrate that correctly, and then we'll label that correctly. And then the next thing I'll do is just make sure that these transpose all the way down. Yeah, let me see something real quick. All right, cool. All right, bet. So that's the current range. So this is the only thing that matters to me right now is what you see right here to the left of the page. This range. How do we trade in this range, right? I think a lot of people get caught up in all this other back clutter stuff when really we just trading inside of this range right here. So this range is the only range that matters. Cool. All right, let's drop it down. So since the price has been consolidating, if I see price consolidating on the daily chart, I will filter through the hourly chart, but I'm really trying to get to the 30-minute chart because I know that's where a lot of the intraday action will be. All right, so again, coming back to this previous day's range, and what I want to say is this is Wednesday's range. Cool. Okay, repricing back into this range here. So it looks like the daily never transposed down. Let's go back out to the daily real quick. Let's go here, 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 here. All right, cool. Hourly chart. There we go. All right, so I was able to get that transposed down. You see these overlapping gaps in here. So anytime you have a higher time frame gap, if you just filter down time frame, so if you go daily, you have a daily fair value gap. It'll also be a 1 minute fair value gap. It'll also be a 30-minute fair value gap. It'll also be a 5-minute fair value gap, and it'll also be a 1 minute fair value gap. And then that's how you take the larger PD array and scale it all the way down to its lowest form to find true turning point. So somewhere in here, this low right here, it banged off in here, there is a gap that it turned off of. Whether it be a 1 minute chart, whether it be a 30-second chart, the turning point always overlaps to its minute form, to the highest form of, I guess you could say, PD array. So the highest form of PD array right here in this instance is a daily chart fair value gap. So everything inside of this is going to be a fair value gap to its lowest and purest form. But again, we have buy side up here and buy side up here. So if the NVIDIA does continue to see higher prices, we want to see if they want to trade above these relative buy stops, those buy side liquidity pools, and then that would lead to a reason to want to read that and see if that does occur after returning back into the discount of this range. So from this low up to this high, all right, that's your range. All right, and this needs to be a base fib, so I'm gonna change that for you real quick. And then I'm gonna go ahead and just calibrate the Fibonacci tool just so we can dot all of our T's and I's. Drop this down to 1 minute only. All right, so the high on this candle comes in at 93.66. So just drop that down. And then this low comes in at 71.03. We'll drop that down. All right, so according to this range, once we go below the 50% level, we have officially returned back to a discount. So we're inside of a discount, inside of a daily PD array that's fractaled down to its most minute form. Okay. And then we're seeing that price run want to normally trade out of that range. So if you're familiar with price, you know that price normally trades in that manner, right? If we are seeing higher prices. So that fractal itself is what I'm foreseeing as a tape reading session to see if price is in fact bullish. If it is in fact bullish, right, you will see this price action begin to run out this high and this high. And as I'm looking at that in the chart, so that's how I am proceeding to approach the market as far as forecasting. But let's drop down a little bit more. Let's get into the 30-minute chart. Let me take off this Fibonacci. All right, cool. So again, fractal down to its lowest form. Here is me just drawing out what I was explaining in the beginning of the video. 1 second. So what I was explaining in the beginning of the video is that the stock market normally has gaps in the market, and they'll show them if they completely overlap. So like in its purest form, this 1 minute gap, this 30-minute gap, will show the same on the 1 minute chart. That there'll be a gap there. All right, cool. So at the 9:30 open is this candle here, right? So there's a premium gap. This is basically what I was explaining earlier. There's a premium gap. So what was taught to me was if there is a gap, premium of discount, 70% of the time, 50% of the gap should be traded to. So with that in mind, if there is a premium gap, then I'm automatically assuming, or I'm under the assumption, or I'm looking for things in the market that will showcase a willingness to respect that statistic. So as we open up here, trade it up into this gap here, right? This SIBI extended out in time, and then we begin to foresee the 50% of the gap closure and 75% of the gap closure. And this move along right here, is enough. And I know, like, I guess I'm speaking towards options traders here. Like that right there, intraday, if you know what you're looking for, that's a relatively easy trade, and I'll get into it in a minute. Day trade essentially. Let's drop down to a 15-minute chart. So there's still that gap there. So the close 3:45, so 4 o'clock. The close at 4 o'clock, and then the open at 9:30. There's a true gap there. So with that true gap, 50% of the gap should be traded back into. So above me, I'm looking for premium arrays. So let's go back out to the 30-minute chart. I'm looking for premium arrays. This premium array, do we respect it and go lower, or do we trade above it and use it as inversion and then get above to these highs on that Wednesday AM session, right? So naturally, going into the market, if we was here and we was looking for that fractal to play out, we was looking for this fractal to play out here. All right, and we open up here. So say we open up right here inside of that fractal, right? But since we open up right here in front of that fractal, but below us, we left a gap, right? Well, the astute trader has to know that even though the order flow is bullish, right, we open up at a premium. So price may want to see 70% of the time, price may want to see a small retracement back down into that gap. It don't have to be a full gap closure, but 50%, 75% does offer a trade opportunity to then want to reprice higher, right? So instead of, yeah, it can be like that, but sometimes it'll be a little bit colored in the form of that, like being able to know and balance that. Okay, there is a such thing as bias, but there is a such thing as turning points, but there is a such thing as premium and discount opening gaps for the day. There's a thing of returning back into that gap. That can be considered a day trade or a scalp with that information in hand, you know. So with that in hand, what we'll do is we'll just drop it down to that 15-minute again. That's that 30-minute gap that we turned at. So you see us open up at 9:30, trade up into it, never get above it and use it as support to trade higher. Never see it just completely just blow through it. Come back down, possibly, and then run through it, and then you want to get up to this buy side liquidity pool of these equal highs here, right? Because all that is right there is just a market maker buy model. Consolidation, redistribution, second stage redistribution, smart money reversal, reaccumulation, second stage reaccumulation, and then run out the model again. Right, so essentially this right here, right, this consolidation that you see right here is essentially that part of the fractal itself. All right, and the sell side of the curve, which is this side right here, down into a PD array, which is here. That PD array can also be a liquidity pool. That liquidity pool can also be overlapped with a fair value gap too, though. So it can be overlapping. We can drop back down into it, right, and then we can run out the high here, and then you'll be, so from this low, all of this price action up until we get up into there, if we do, is essentially the right side of the curve. It's essentially this side of the curve. So this side of the curve is the current price action that we are looking at right now. So 15-minute, right? Buy side here. If we want to poke above that, buy side is there. If they wanted to poke above that, 5-minute chart. All right, open at 9:30. We didn't completely trade down to the 50% level, but we repriced up, and then once we get into here, we'll be looking for setups for displacement, that frame A entry, to then return back down into 50% of the gap, right? Ultimately 75% of the gap here. All right, 1-minute chart. I would like to go back to the open at 9:30. There we go. All right, so the open at 9:30 is here. See us trade up into that area there. Boom. Leaving the buy side to be attacked, and then you see us begin to reprice lower, right, back down into this side of the gap. So this side of the curve here. All right, and I won't get into looking at all of it and analyzing. I just want to give a top-down approach to how I approach looking at stocks whenever they are trading, how they are trading. Hope you enjoyed this video. Like and subscribe. Talk to them.